All right, we missed some recaps, so we are back at it. Um, Nasdaq today, very very clean. Ever since Monday and kind of our overnight session as a whole, turtle swooping highs, FEGs filling, all that good stuff, all the way down into New York. Same thing, FEG to hit, thinking continue, and then ER I guess just tanked us because it did. So it's one of those things of just like following the order flow and then recent delivery. We had buy side delivery set up, so we should have been looking for an LR move down back to the sell side and all that good stuff. As for the week outlook though, we're here. We do have FOMC tomorrow as well as NFP on Friday. So I did have an initial outlook this week based on the squiggly lines that I had on them. Just kind of move up into FOMC. I did not factor in the ERs that we have, so if we open up down near 420 to 421, I would anticipate this to essentially just generate an equal low. Somehow set a high a day or something around there, around 426 or even overnight. Let Thursday go semi-inside or 2 down. And then NFP can either hit the failure swing of Wednesday and then sink, and then that's how the monthly candle will start. And essentially February itself will open, set an immediate high, and then trade through its opening price and start to decline through all of this, through basically 19 and underneath. So it'll be very interesting to see because the monthly candle is closing tomorrow, and the new one is starting within those first 2 days as well. So I wasn't really factoring that in when I initially drew those first two, but that's kind of the new initial look with knowing that there is those type of news events coming, and then just the time itself. Oil, pretty solid. I completely missed the trade here. I watched it essentially live right when I woke up, and I did not hop onto it. I did not hop onto the immediate rebalance of that order block either. I just was demanding better prices, and that was my mistake. And sometimes really it is just worth just hopping on if you know you're probably not going here. Just play time and wait and see how long it takes for you to hit this area or this stop loss, or if you even do, well then you're already in. That type of deal. Especially for me, having a tendency to hold trades long past anyways, it would have made a difference in terms of what the huge losses are and then what this actual underlying amount is. So, as for the higher time frame, oil was hitting daily fair value gap, so crushed right into it, right at New York. That was the area that was highlighted on the 5-minute chart, so perfect higher time frame PD array and everything like that. Market trades back down into a breaker. All the up close candles here, FEG. It's pretty clean on a 30-minute or even a 15, but this up close candle here, low, high, lower low, break. You get an FEG to continue. And the biggest thing I want to note about this specifically is notice that the sell side delivery of these three bodies here, from this level to this level, you have sell side delivery. You have that area knowing that there was sell side there. When you're looking for, if you move past it, and you're looking for sell side back into that range, it only needs to come up to where it last delivered sell side. Because at this opening price and below, sell side was already delivered efficiently. Just sell side. So when you're looking on that retracement, the market should only seek inefficiencies. And so the inefficiency is going to lie essentially above the opening price of that sell side delivery. And that's why the bodies are just fully able to sit there and support it. Even though, yes, it wicks down into it, the bodies completely stop right where they should. And that's the big key. And then, of course, FEG continue. Why not? But, ES. It and Dow definitely behaved a little bit better than NASDAQ did today. So, same thing though. Running lows, pushing up higher, FEG, and just kind of mooned through close and everything like that. I am inclined to almost have high of the week be set on ES. I'm not sure, truthfully, if they'd want to run these highs, only because all of the other failure swings here have already been turtled and everything like that. So it could just be a 99% retracement idea, and that's actually going to be protected. And FOMC itself should essentially trade up into it for the rally still, and then I was still looking for that decline earlier in the week through the 4 daily lows here. That's why we could see something where if FOMC kind of just rips higher, it'll stall, or flag, whatever it wants to do. Thursday can either start the decline or trade slightly inside, which it really shouldn't do inside, but it can start the move down, and then Friday can really either speed it up, or Thursday is the head start, and you can start moving at like 8 o'clock p.m., like after close, if you want some kind of moves there, because on the daily, you have really 4 failure swings to go for that are just stacked immediately now, but this order block is likely going to have to be reacted off of first, which is why I want to see some type of move down into it, either this morning off of ADP when it comes out, or just anything like that in general to just retrace and set the failure swing. Would be ideal. And, if I'm not mistaken, we are hitting 2.5 standard deviations off this minute move here. Now, if you wanted to take, like, actually, yeah, just going off of that, but that's kind of just not here nor there. So, want to give a huge shout out to gold. Honestly, people talk about the literally copy pasted itself today and yesterday. I traded neither of them, but looking at it, it was absolutely comical. Hitting PDRA, CSD around 9 o'clock. LR down through the news and just crushes it. And then literally the same thing. It just did it through jolts instead. It just stalled for longer up until 10 o'clock news release, and then it just immediately shot through. Now, I will say, and just like for PDRAs in general, if it's trying to really go somewhere, it's just going to hit some delivery and then switch back to wherever it was. Meaning, when this wicks down here and hits this BISI, it's only just going to offset this until it hits a spot that causes it to change back bearish. In this case, the immediate BPR. Same thing here, it reacts off this order block slash other BISI. Market trades up into it. And that's fine and dandy for a reaction. But you need to ideally just be expecting that you're going to get, again, delivery is going to shift back bearish when it reaches an inefficiency, whatever it was up here, and then still crush through to whatever final target you may have or draw on liquidity. Like PDRAs especially, if you see them not get used, you'll see them get reacted off of. For how long they hold, quote unquote, or the reaction lasts for, can be indifferent. But the idea is the market's just going to deliver somewhere that'll cause it to switch states backwards and then continue where it needs to go. Even in this down move here, market trades into this bullish breaker here. It gets the reaction, but it just delivers to somewhere that causes it to switch bearish in this case. So it delivers bullish off the breaker just to hit a bearish order block and then delivers shifts back bearish. And that's why, and that's really how people get trapped in like side of the curve and market maker models, is the PDRAs will very often get flipped and used and then just get torn through eventually anyways. So, but I just did want to point this out because that was, I found it absolutely hilarious. It literally copy pasted themselves, time and everything. So, but that is the outlook for rest of the week right now. With it just being what we have, be interesting, but other than that, I'll see you guys in the next one. I am still working on the order block video as well. I did want to mention that. I will probably end up making it more so just like a rant type of deal. But I did get a little bit busier on my schedule, so I'll try to keep things flowing in the ideas and everything like that. But we will definitely keep going.